we're going to bring on our next guest now. One of them was quite shocked by the FTX fiasco, and we're going to find out why. So please welcome now Frank Curzio, CEO of Curzio Research, joined by Adam Sharp. He's a consultant with HIVE blockchain. Welcome, gentlemen. Nice to see both of you.
Nice to see you again.
Thanks for having us.
Yeah, lots of good stuff to talk about. Frank, I was curious to get your thoughts. I read in an article that you were quite surprised by the FTX fiasco. We all know you as a huge believer in this space. Tell us a little bit what's going on in your head right now. What are you thinking?
I think FTX caught a lot of people by surprise. I mean, one of the largest, and just leading up to that, because we saw what happened with 3 Arrows, Celsius, Voyager, right, which is a couple months earlier, which is June, July, August. And you had FTX buying a lot of these assets, right? They're looking to buy a lot of the distressed assets. They had their name out there with Tom Brady, with Shaq. So, and this was a name that was a lot of people were familiar with, a lot of the younger generation familiar with. A lot of people had money with them. And to see what happened and what unfolded, plus, researching a lot of these cryptos, one of the biggest things for me that I like to look at is hedge funds and private equity funds and venture funds jumping into these names. And they had a lot of these. They had some of the top names involved. And you would think that that gives you the okay and that due diligence was there, but it clearly wasn't there. And that's what happens when you have a leveraged market. So I think it surprised not just me. I think it surprised a lot of people that happened. And, it hurt the markets. You're seeing contagion. You're seeing a lot of companies. You're seeing they were supposed to bail out Voyager. Now Voyager just not Voyager. Well, Voyager was one of them. Voyager went under. BlockFi just announced it that they have exposure. So obviously, and looking at how many firms, even Genesis, right? Genesis was a big leader in the space as well that might need money. I think this surprised a lot of people, and it put a black eye on crypto in general, because there's people on the fence that want to get into this. You need more transparency, which some companies have. Most don't in this industry. This was a name that was supposed to be transparent. This was a name that was supposed to check the boxes that was okay, and it wasn't, and it clearly hurt a lot of people, and it gives the industry a little bit of a black eye for now.
Absolutely. I mean, talking about catching people off surprise, I just posted an interview I did with Kevin O'Leary, who, as you know, was a spokesperson for FTX, heavily invested in FTX. And I said to him, you're one of the toughest sharks out there. You see through the BS. You could catch red flags. And he's like, I know. And I missed it, so it can happen to the best of them. I guess the question is, and I'll ask you this. Please, no.
No, Scaramucci too. Scaramucci's been on my Wall Street Unplugged podcast, and he's been on plenty of times. And the contacts that he has, Salt Conference, great guy, deep contacts. We know his political ties. I mean, this fooled a lot of people. There's a lot of big funds that were invested in this that they fooled. And they just announced a big partnership, right? So sometimes that happens. It happens to the best, and it's unfortunate, but we have to wait for this to play out. You're seeing it play out, and I'm just surprised that Bitcoin has been holding up so much, which I think is a very, very bullish sign. I thought it'd be down a lot more here, and I don't know. There is going to be other companies that you're going to see have exposure, but to see how well it's held up over the past 4 months, I would think it would be a lot lower from here. And your last guest, who's Michael Goen, a very smart guy, said that there's less volatility now in Bitcoin, and that's because people who had their assets in Bitcoin and Ethereum on certain platforms, if you had on Voyager, if you had on BlockFi, if you had on Celsius, you got locked up. And you're waiting and you're saying, what am I going to do? So what happens is there's less volatility because everyone's taking their Bitcoin off and putting it in cold storage, which is actually, those are the people that are never going to sell Bitcoin, which is actually a good thing long-term for the price, right? Because there's a limited supply. So you just see this adjustment to where we need regulation. I don't know if regulation would have helped here since these are still foreign-based firms. It does help with Coinbase. I think it helps with Silvergate, the short sellers attacking these names. I think those are names that look attractive here because you could see everything. I mean, Silvergate's regulated by the Federal Reserve. I know short sellers that are coming out. I've seen their short sellers. I've seen their thesis on it, and it's not good enough for me to say that it's fraudulent. I don't see it due to KYC, AML compliance. I'm not seeing that. So Coinbase has $5.5 billion in net cash on its balance sheet. You could see everything. Again, these are publicly traded companies in the U.S. that are fully regulated. Do they have a little exposure? Are they going to hurt due to the lack of demand in trading crypto? Yes, but they're not fraudulent. I don't see them being fraudulent, which is presenting a very good opportunity because people have to go someplace and trade.
That's a huge point you're bringing up, Frank, because I've had numerous talks with folks who are like, should I be getting off Coinbase? Do I need to go on a cold wallet? I mean, this is I mean, are you getting that feedback as well? People concerned about being on these type of exchanges?
Not Coinbase. I mean, I have my assets on Coinbase. We have a business account now that's in Coinbase, and because it's insured. So think about all the business accounts through FTX. Think about all these companies, and now you're looking and saying, okay, I need this kind of assurance like it is a bank, and that's what Coinbase offers. So, when I look at Coinbase, I'm not saying it go higher or go lower. Again, it's linked to crypto. I will say that it's not a retail company anymore based on trading, which is what a lot of short sellers think. This is an institutional company. 78% of that trading is going to be institutional. Plus, the USDC stablecoin, the interest that they're going to generate, just the interest income they're going to generate is anywhere from $700 million to $1 billion just in that. So it's a different company than just saying, oh, well, crypto's shot and people are trading less. And yeah, I get that. That thesis is in there. That's why I fell from wherever it came out 200, went to 400. Now, wherever it is, 42, 43 now. I think a lot of that's baked in, but think about the survivors and think about the survivors during the dot-com era. That's how you have to be looking at this industry, because even the good players are going to get hurt. And instead of speculating on some of the cryptos that I've done numerous research on, over 1,000, telling my base that around 90 to 92% are garbage and going to go under. I can't see the fundamentals. I can't see the financials. I can't see anything. The utility tokens, they don't have utility features. Coinbase is a name that just makes sense if you're a real believer in crypto here.
Adam, I just want to get some thoughts from Adam as we're going to wrap soon here. Adam, do you agree that you're surprised by how well Bitcoin has been doing, how it's holding up amidst the fiasco?
Yeah, absolutely. I mean, people like to compare from the peak, but that peak of 69,000 or whatever was hit for about 2 hours or something on one day. So you really have to take a longer look at things when you look at Bitcoin in general, in my belief. And I think one of the things that is helping Bitcoin hold up is the fact that, so it turns out that FTX had created something like 50,000 paper Bitcoins, essentially. So people thought they owned these Bitcoins. They were either wrapped on Solana or just owned on the FTX exchange. And they didn't actually have the Bitcoins to back these up. So it's extremely unfortunate because a lot of people thought they were buying Bitcoin, but they were just buying a paper worthless asset. But, as this leverage comes out of the market and as these bad actors are exposed, I think we're going to continue to see, there's a lot of rehypothecated or paper Bitcoin out there. And hopefully all that stuff gets flushed out of the market, because it's essentially diluting everyone else's stake. And the only times you discover things like that is during a really sharp, nasty correction like this. So it's unfortunate, but it's kind of a market cleanse, that it sounds a little crude, but you have to have one of these every couple of years, or the bad actors just completely get out of control, as they had, like we saw with Celsius and Luna and FTX. So you have to have these events every few years, or everything is going to get even more out of control.
Frank and Adam, I appreciate your thoughts today. We're going to keep moving on here. We're going to be talking regulation next, but thanks, guys, for your insights today.